In the currency quadrant, taking a look at the September euro currency, which had an outside range day after a big jump higher, indicating potential near-term weakness. The euro has now fallen in 6 of the last 9 sessions, including today, and despite finishing the week positive, it dropped substantially from having been up 0.9% to only 0.19% on the week. The high today, 111.59 was up 46 basis points, so just short of 0.5%. The low today, 110.69 was down about 1/3%, with a little bit of time left in the future session, but the New York session closed. We're still down 0.25%. We got an ECB rate meeting next week, and they're expected to cut rates by 25 basis points, and then analysts also expect them to cut in December by that same amount. And that did not seem as aggressive as the U.S. Fed, which is why we saw an early rally this morning, but then U.S. non-farm payrolls came in weaker than expected, but muted, and that pushed the aggressiveness of the Fed rate cuts out, causing this midday decline in the euro. We now have a 70% chance of a 25 basis point rate cut in September, according to the CME Fed Watch tool. And that's kind of muted the aggressive rate cut scenario that people were pricing into the euro currency. That's the U.S. rate cut scenario. Also looking at U.S. Treasuries, they dropped this week almost as much as the entire month of August, which initially pushed the dollar lower, but then the dollar started to recover in what seemed like a flight to safety as risk assets, especially the U.S. stock market, sold off throughout the day. So that again added to the weakness and the outside range day that we had in the euro currency futures.